Question number 27. Question number 27. So here A and B are partners. A and B are partners, and their ratio is 2:1. Okay, their ratio is 2:1, and they admitted C. They admitted C for 1/4 share. Okay, this is there. They admitted C for 1/4 share as his, but it is not mentioned C is getting his share from whom? From A or B, and their new PSR also not given. New PSR not given. So when new PSR is not given and it is also not mentioned C is getting share from whom, then sacrifice ratio will be equal to old ratio. Okay, so this is useful for our goodwill purposes. So here in this question you have to prepare a revaluation account and capital account. So first we will prepare revaluation account. Means balance sheet is given. In balance sheet figures are there. These figures they want to change, revalue. They want to do revalue. So for revaluing the balance sheet figures, we have to prepare a revaluation account. Revaluation account. Okay. So it has accounts, so debit and credit sides are there. So here you have to keep in mind any assets if you want to increase, you have to write in this side. And because assets are by nature debit, so if assets to be increased, it is to be written in debit side only. Liabilities, if you want to increase, because liabilities are by nature credit, so if liability you want to increase, you have to write here. Now just reverse. If assets to be decreased, it will come to here. Assets decreased. Because assets are by nature debit, if you make any credit entry, it will decrease. Likewise, liability is by nature credit. You want to reduce any liability, you have to write in this side. Liabilities reduce. Okay. So based on this, we are going to solve this question number 21. We will prepare a capital account and revaluation account. Okay. So revaluation account we are going to prepare first. Revaluation account. Here revaluation account we will make debit and credit. And capital account here we will make capital account. Okay, capital account here we will make. Capital account, 3 partners are there, so 3 columns are required. A, B and C. Here also C, B and A. This is credit side and this is debit side. In case of capital account, credit will be all the items which partner is eligible to for payment take. So here whatever he is eligible for taking, whatever is his rights will come here. And what is his liability, that is always on the debit side. Capital account is debited with whatever the partners has to pay, and whatever the partner has to gain, it will be written here. Okay, this you just keep in mind. Here gain side and here payable side it will be here. Okay, here payment, whatever the partner has to pay, we will write here. Whatever partner will gain, we will write to this side, and the question will be solved. So C will bring in, first we will write their balances. First we will write the balances. By balance brought down 1,80,000, 1,80,000 and 1,50,000. Okay, 1,50,000. C will bring 1 lakh by bank account. C will bring 1 lakh rupees. 1 lakh rupees and 60,000 as his share of goodwill for 1/4. So whatever goodwill he will bring, it will be taken by A and B in their old PSR, because new PSR is not given, and C is taking his share from whom it is also not given. So by premium for goodwill account, 60,000. So 60,000 divided by 2/3 and 1/3. So 320 to 40,000 and 20,000. So goodwill is divided. Plant is to be appreciated to 1,20,000. Here the word is appreciated to. Two shabd, two word, you be careful. So previously in the balance sheet, plant is given at 1 lakh. It is appreciated to 1,20,000, means 20,000 you have to increase. Asset is to be increased, it is to be returned to debit side. To plant and 20,000. So what to plant account? Here one correction is there, means when asset is to be increased, so asset account is to be debited and revaluation account is credited. It is revaluation account, but assets by assets we have to write. So assets increased will come to this side. Assets increased. Okay, and liabilities increased will come here. Likewise, liabilities decreased will come here, opposite, and assets decreased. Because when an asset is increased, our asset is to be made debit, then only asset will increase, and it is not an asset account, it is a revaluation account. So journal entry will be assets account debit to revaluation account. So assets account debit, it will come this side. So here we will write by plant. By plant means plant account debit to revaluation account by 20,000. So it will increase. Plant is increased. The value of building is to be appreciated by 10%. So building already 1,50,000 is given. To be appreciated means building account to be debited. Building by means debit. By denotes debit. By building account means building account debited. Building account debited by 10%. 1,50,000 is the value, so 10%, 1,15,000 will come. Okay. Stock is found overvalued. Now stock is already overvalued, so stock is to be reduced. So to stock account revalued by rupees 4,000. So this entry will reduce the stock, because your journal entry will be revaluation account debit to stock, and stock by nature it is an asset. So asset is when created, asset will decrease. So asset decrease will come to this side. A provision for bad and doubtful. So provision you have to make means credit you have to increase, liabilities you have to increase. Provision is a liability. So to provision for bad debts. Provision for bad debts to be created 5% of debtors. 5% of debtors. So debtors is given 60,000. 60,000, its 5% is 3,000. Okay. And creditors were unrecorded to the extent of 1,000. Creditors now you have to increase. So one creditor, two creditors. One creditor is not recorded. Now you record it by 1,000. So if you make any credit entry, creditors will increase. So here the balance this side is higher. This side is 35,000. Okay, this side is 35. So this total will come to this side 35,000. And whatever the answer is, it will be to profit transferred to capital account. To capital account of A and B, and this total will go to outside. 27,000. Now it will be divided into 2:1. Old PSR, it will be divided into 2:1. So 27,000 divided by 3, 9. 9 into 2 means 18,000 will go to A and 9,000 will go to B. So okay. So here we will write by revaluation account, because whatever partners gain, partner will be is eligible to get. Partner is eligible to get. This comes to this side. So by capital account, by revaluation account, So by revaluation account it will be 18,000 and 9,000. Okay. Then your question is now over. So question is over. We will make the balance here. To balance carried forward. Okay. So this is the profit. This is one of your answer. One answer is this and one answer is this of the revaluation account. Now capital accounts balance we will take out. So 1 lakh. 1 lakh. So C's balance will be 1 lakh. Here 150 and 9. So 179. So this total will come to here 1,79,000. 1,79,000. This is his balance. And 8 2,38,000. So 2,38,000 will come to here 2,38,000. So this balance is always shown to this side. So here you can write by balance brought forward, and this figure you can write here 2,38,000, 1,79,000 and 1 lakh. Okay, this is the capital account and this is the revaluation account. In this way we can, now they are asking for past journal entries. Now journal entry also they want to make. So I will just wipe and give the journal entry also. Now journal entry. So in revaluation account, whatever we are increasing, we will write for that plant account debit, building account debit to revaluation account, This will come to here, and narration will be assets increased. What narration? Narration will be assets increased. Okay, now all this side of entries, revaluation account debit to stock, to provision for bad debts, to creditors, Here assets decrease and provisions made. So here this will be your narration. The stock is 4,000. 3,000 is provision for bad debts and 1,000. So that is 8,000 will be here. And one entry will be for distribution of this profit. So revaluation account debit to A is capital to B is capital. B is capital account for distribution of profit in old PSR. You have to write the narration also. In old PSR, so 27,000, 18,000 and 9,000. Okay, so this side is your over. Now we will, that goodwill journal entry also we have to make. So what goodwill journal entries we will make? So goodwill will come that here space is less, so we are writing here. So first bank account debit to C's capital account. C is bringing 1 lakh rupees, and to premium for goodwill account, whatever goodwill he gives in cash, 60,000. So in bank money will come 1,60,000. Okay, this will come, and then this will be distributed in old PSR. Premium for goodwill account debit to A and to B. So 40,000 and 20,000. 2:1 ratio. Old PSR. So 60,000 premium will be distributed. This profit is also distributed. And show the balance sheet. Now they are asking, journal entry portion is over. This will be journal entry of capital and goodwill brought and distributed, and this is revaluation of all. Now what they want? They want you to prepare a balance sheet also after admission of C. It means revaluation account and balance sheet also they want you to prepare. Okay, so they want you to prepare balance sheet also. And balance sheet. New balance sheet. New balance sheet also you have to prepare. So you know balance sheet, it has two parts. One is liability side and one is asset side. It does not have debit and credit because it is not an account. It is a sheet. It is in a paper we are preparing, so it does not have. So now you have to first you have to write the capital accounts. Okay, or from here old balance sheet you can go by serial also. So in the old bills payable is there 10,000. We are also going by serial. Then creditors was 58,000, but we have increased creditors by 1,000 to the extent of 1,000 plus new. So 1,000 we have increased. So it became 59,000. Okay, 59,000. Outstanding expenses 2,000 is given. Okay. Then one new okay. So now capital account will come. Capital account A, B and C will come. C is capital account 1 lakh. A and B we have calculated, but we have cleaned it, so that figure is not available. Okay, I will do something. Okay, here now credit side, cash in hand. Cash is 10,000. Bank account here 40,000 is given, and you remember, plus new partner has given premium for goodwill 60,000 he has given, and capital also he has given, capital of C 1 lakh he has given. So all together bank account will be 2 lakhs. Okay, this much capital of C also will come here. Sundry debtors, sundry debtors is 60,000, and you have made a new provision of 5%, that is 3,000 rupees. You have made new provision at the rate 5% you have made, so that will reduce it. So 57,000 will come here. Okay, 57,000. Then stock is 40,000, and stock was reduced by 4,000. So 40,000 less reduce 4,000. So it is 36,000 stock. Then plant was increased. Plant value is 1 lakh plus increase appreciation. We write it appreciation. Increased appreciation 20,000. So it will become 1,20,000. Okay. Then building is 1,50,000 plus appreciation. Appreciation means increase, depreciation means reduced. So building is also to be appreciated by 10%. So 15,000 was here plus. So 1,65,000. So this side, these are the figures. I will make a total of it. Okay. So this side, whatever is the serial of the old balance sheet, you go on writing, you will not miss anything. Otherwise, you can miss some figures. Okay. Otherwise, you may miss. Now we will to make a total. $5,88,000. Okay, so this 5,88,000 will come here also. 5,88,000. It means the capital of 3 will be so this total will come to 5,07,000. So AS capital account, whatever we have calculated, that you write here, because I have rubbed, so that figure is not available with me, and B's figure also, from that you write here, and all 3 will come to this one. Okay, and then otherwise again time will be wasted. I have to prepare capital account, it will take too much time. Okay, so this is the way to prepare a new balance sheet. Okay, now we will go to the next question. Thank you. So in this way, you can prepare revaluation account, capital account, and balance sheet. All questions it is not possible to solve here. Just I have told you the method. One more video I will make for one question, and then thereafter we will take thereafter you go on make it practice. You just keep remember my words. Now thank you for watching this video. Please share it to your friends and subscribe to our channel. Your friends may also get new videos who are unable to pay tuition or coaching fees, or they are not willing to pay tuition and coaching fees. They can also have the benefit of my videos and can develop their own self power of solving questions. Thank you.